traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. It is time to get started. It's time to get ready for today. So let's do that really quick. And I'm pulling up the bias chart right now. Yes. Hello.
I tweeted you out those two. I tweeted you out those two videos from Mark Chandler just now.
Great. Thank you very much, Paul. Appreciate that. All right. All right, folks. Let's start with the euro dollar, and obviously the euro was hit today. A lot of that had to do with the frankly the dovishness of Mario Draghi, really just reiterating his dovishness, and pushed the euro back down towards the 107 level. Now, as you can see, we actually hit that downtrend line last night, and I did not have a euro dollar sell where I was planning on it. I actually had it planned on shorting the euro dollar if it rallied back to this 107.80, and I didn't have an order out overnight. I don't know if I would have gotten hit anyway. I mean, we went as high as 107.79, so realistically I probably would have kept it around 85, and I'm just telling you, I probably wouldn't have got triggered as a short, although I wanted to be short up at those areas. As you know, I've been trying to play this range up here, and I just didn't do it last night. I got kind of caught up doing other things last night. So unfortunately, I didn't get short. But you can see, really, this downtrend line has taken the euro down. Now, we were looking at the potential of a head and shoulder setup. Okay. Now, the problem when you see a setup that looks like this is you get everybody trading it before it actually breaks out. So now you got, I would imagine you've got a lot of people that are long the euro right now. And I will tell you, if we break above 108, okay, if we break above 108 today, that will start a squeeze. We're basically going to have to see Fed governors backtracking on any hawkishness that we've seen, and really start to, the market will have to question if there's going to be a rate hike in December in order for us to break out above 108. I'm not here to figure out what the Fed governors are going to say. Okay, I'm not here to assume they're going to say one thing or another and take trades based on that. All right, that's not my job. My job right now is to prepare for either situation. Okay, so what does that mean at this stage in the game? Because I don't have any euro exposure. I'm not short the euro. I'm actually long euro, and I'm long the euro pound, and I'm up 2 pips from yesterday in my euro pound long, and I'm long the euro Swiss, and I'm down 15 pips, but that I've been sitting in for the last couple of weeks. I'm actually long the euro right now. I'm not, and I don't have any euro dollar exposure. But what I will tell you right now is that looking at the euro dollar at the moment, I'm prepared to play a squeeze. If the Fed chairman does not give us any indication that we're on track for a December hike, we're going to break. And we break above this, I'll just call it 107.90. We break above 107.90, we're going to squeeze. We are. Very aware of that. And I'll trade it as a squeeze too. 107.90, I'm sorry, 107.90. Okay, that's major resistance. Okay, now the flip side is we are at risk of taking out some support here. So what type of support do we have? Well, we have these lows over here. You might say, well, how about those recent lows? Yes, those are important, but what's even more important are these lows over here. 106.58, 106.64. So it comes in 106.60. So don't get all, uppity if we break this low here at 106.73. There's another horizontal low just below that at 106.60. Okay, That's going to be important support today. 1.0660. Now, if that breaks, um, then we got some problems. Then you start exposing moves down towards, you're going to start exposing moves down towards sub 106. Okay. But 106.60 is going to be support. It's horizontal from way over here back in April of this year. Okay. So, like I said, don't get super excited if we break down below these lows. You know, uh, just know that there's more support just below it. Okay. All right. And like I said, I wouldn't mind playing a squeeze. I'd be really happy if we got a squeeze personally. I mean, my pound, I'd have to get out of that, but I'd be happy with a euro squeeze because that means I could get short more aggressively up at 109 ish, you know, 109, 109.50. That would be cool. Like, if we got a squeeze in the euro dollar and we did this, we did the, squeeze in the euro and we, inverted head and shoulder pattern, dude, that'd be fantastic. Then it'll be short right there. As soon as we hit that, I'll just go, and load up shorts up there. That'd be great. But you know what? There's a lot of people hoping that's going to happen. Probably so many people hoping that that's going to happen that guess what's going to happen? That ain't going to happen. You know what I mean? Like, that ain't going to happen. There's so many people hoping it's going to happen. It ain't going to happen. So that'd be my best guess. So ERW said, well, how about Janet Yellen trying to talk down the dollar? Well, first of all, Janet Yellen's going to have to face the music. I mean, it is what it is. If we're going to raise rates, we're going to raise rates. And the repercussions of raising rates is you're going to have a strong dollar. She knows it. Everyone knows it. It's part of the the process, if you will. So I don't think you can't talk down the dollar and raise rates at the same time. Just ain't gonna happen. She knows it. Okay. She's got to worry less about the dollar, which the dollar is obviously going to be a problem. But look, historically, it's not really an issue right now. But the big problem is making sure that equities don't collapse. Because remember, what at this point in time, what's more important? What's more important? The dollar strengthens a little bit, affects some exporters, maybe some multinationals, or what's worse? You don't give the market ample warning that a hike is coming, and then you hike rates and equity markets lose 20% of their value right off the top. What's more important? I'd venture to guess more important in the market or to the Fed governor right now is that equities do not collapse. That's it. We don't really, I mean, and it's inevitable that the stock market's going to pull back. What they're going to try to prevent is the equity markets from really taking it in the sphincter after they hike. That's why they're preparing the market. They're trying to assure the market things are going to be okay. And I have to admit they've done a really, really fantastic job. You may not admit it. You may say, well, no, they're backtracking. I guess the Fed, what they say doesn't matter. You know what the Fed's done? They've prepared the market really well. That the market has really brushed off the idea that we're getting a rate hike in December. Now, I still believe that when the Fed actually pulls the trigger, equities are going to come off. But notice how the equity markets are not really responding right now. Like, okay, I know a hike's coming. Okay, I get it. A hike's coming. Sure. We're not far off of the highs. We're two percentage points off of the all-time highs in the S&P. That's pretty good. That's pretty good. The Fed is doing a great job. They've they're totally preparing the market for a Fed hike, and the equity markets are still near their highs. Guys, that's great. It's great. Yeah. Now they got another thing coming. The dollar's probably going to rip their socks off, but you know, yeah, I mean, but that's an issue that they're not probably worried about a whole lot just yet. Okay. Anyway, I'll get off on a tangent. I don't need to. We got a lot of stuff we got to do. So this is a bearish trend. God, man, I can barely see this morning. That's what happens when you wake up like so early. You know, it literally takes like a couple hours for my eyes to like adjust at this time in the morning. It's crazy. All right, the cable. Okay, so everybody knows big resistance now in the pound is this channel high. You know, you got the little channel here. It's going to be right at this previous support, current resistance. I mean, how well behaved technically is the cable right now? I mean, in a channel, we hit previous support, current resistance, rejected. How big is that? 152.70. I mean, that's channel support, right? And look at the lows today. What the hell? Okay. What? Oh, I'm sorry. I was trying to figure out what the hell. That wasn't working. Yeah, I mean, support at 151.70. We went to 151.73. I mean, look at how well that's behaved. I mean, channel support held like a champ. So 151.70 is support this morning. We may break that this morning while we're here, but 157, what was it? 150, I'm sorry, 151.70. 151.70. Below that, I guess we can imagine that we've peaked. I don't know if this is necessarily right, but imagine that we've peaked here. 151, 151. 35 is the 50% retracement that comes up right there. So that's probably your next support below that. So here, you know what? I'll do this. 151.35. Okay. Oops. 151.35. There. Done. Okay. There we go. 2 levels of support for the cable. Resistance 152.50. 152.50. We are still in a bearish trend. Well, while we're below this triangle, you know, since we popped out of this triangle here, while we're below this trend line, we're bearish. You know, we get back above that trend line, we'll go back into a range environment, but we're bearish for right now. All right, let's go to the Swissy. Now, you notice the Swissy, and by the way, I picked up Swissy, just a really small, like 1/3 size position. I picked up the Swissy at 1.0044. Hold on, 41. I'm up 6-7 pips right now. I'm just sitting in it, but the thing is the Swissy's not pulling back. I mean, very minor pullbacks here. You know, I have orders stacked below parity, and it's just not. They're not getting tripped, right? Risk is that we break 1.0090. Parity is support. Okay, that's a major resistance. We start breaking that, and we're taking off again. Okay, dollar yen. So the dollar yen, we obviously we have resistance here. Okay, that's a given. So the given is 123.70, huge resistance. Period. End of story. Okay, 123.70 ish, big resistance. I still think we're in a range. And even though you go, oh well, Blake, we've had a nice rally here, but overall, just big ranges here. Um, we broke through this trendline support. That didn't give us any downside. So what that means is that is irrelevant since we broke that trend line, yet there was no follow through. So you can see this support is really holding down here at 122.70. In order for the dollar yen to turn bearish, we would have to break 122.70. We have to see a breakdown in equities too. I mean, that has to go hand in hand, and right now, not going hand in hand. So, well, equities aren't just going down. That's it. So 122.70 is support. Okay. Let's go to the dollar Canadian. Here's the dollar Canadian. And the dollar Canadian, as you can see, has, we drew yesterday. If we get down to 132.10, that would be a great place to be long. We actually hit channel support, and then we're now flagging and moving higher. So the issue here with the dollar Canadian is crude oil. I mean, you look at crude. I mean, crude oil looks nasty, like gross. This 133.20 is at risk, and if we break highs, see okay. So the bigger issue with the dollar Canadian here, because I know, I know a lot of people are trying to short the dollar Canadian up here. Just there's a 786 that we've stopped on, like on a dime. So now the risk is if we break through that 786, the risk is we push right through these highs. That's the risk. So 133.20, huge resistance. 25. Okay, 133.25. Huge resistance. One. Okay, that breaks and that exposes a lot because see this flag pattern here. That's what it is. It's a flag pattern, right? So let's get rid of that. And you see them, you see the flag pattern in the cable, flag pattern in the Canadian. Here, let's get rid of this since this worked out yesterday. You got the gist of it yesterday. Now you got a situation where that puts us to new highs. Now, this is a good setup for maybe a short in the future, because let's say the Canadian breaks new highs above 134.50, we complete the flag pattern, then you short it right here, right? Now that's not a bad idea, but Mirko says copper's getting jacked up today. It is. Copper's hit 13, 14-year lows yesterday, right? It is. Hold on, I'll just take a real quick look. I mean, what's copper telling us? All's good in the hoods. Yeah, look at copper. Boom! 13-year lows. I mean, well, not 13-year lows, I'm sorry. What is this, 2009? We're in 2000, 7-year lows? 6-year lows? Damn, girl! Sorry. Okay. Anyway, back over to our charts. So, where were we at? Oh, damn, I didn't even do this. Dollar Canadian. So, this is, we're in a range environment, but we're threatening to turn bullish, and I have to do this 132.10. As long as it's above 132.10 now, it's got that bull flag in play, or yeah, close to in play. Let's do the Kiwi really quick. Kiwi's at risk. Why? Because there's a lot of people playing this inverted head and shoulder pattern right now. Lots and lots. And one of the things that I would, first of all, I have a tough time doing. I don't like to play a complex head and shoulder pattern in the direction of where it's supposed to go. So in other words, The slant, see the slant right here? If you're if you have an ascending slant like that, then playing a, you see how much you take away from this if you're looking for a move like this, okay? You're taking away a lot of the move because of the upward sloping neckline, which I really don't like to trade. I really don't. I mean, I've seen them work before, and it's not completely uncommon for it to work, not to work. But to do something like this, okay, the inverted head and shoulder pattern like that, it's easier to play when it's the neckline is in the direction of the trend. So then when you break out, you have the distance between here and here, because now you only have a distance between here, and then you've got to push up a lot further to complete, you know what I mean? Which makes it way more difficult to do. So for me, it's real tough. But you can see this is what, you know, everybody's trying to play. The problem is that you know, if we do take out this 164.80, which is a 618, we've got a lot of horizontal support down there. Okay, we have all this horizontal support. If we take out this level, 64.80, 80, let's just call it 64.80. Big problems for the Kiwi. We're only 50 pips away from there. Major support. Resistance right now, I mean, we can't break this 65.80. I mean, we went as high as 65.89 the other day, 87. So I'll just say 65.80, right? Maybe we had 65.90 written down before, but whatever. It's still holding, you know, within 10 pips. All right. I will be back. I'm going to take a little bit of a break. When I come back, we'll do the Aussie dollar index, peso, all sorts of fun stuff. Don't go anywhere. All right, traders, this is Blake Morrow, and the dollar Canadian is making a move. It's making a move. What was that? Where'd you guys, what is that? Hey, I'm short the Canadian yen still. That's good, right? See, that's good. Being short the Canadian yen, dollar Canadian going higher, that's good. That's okay. I'm in. It helps. Every little bit helps. Okay, let's take a moment and just notice that the Aussie and the Kiwi are getting a little smackled right now due to the Australian, or due to crude or copper. Sorry, getting smashed. Gold has gotten hit. Crude's getting hit. Commodities are just under a lot of pressure at the moment. So generally speaking, there's just, you know, a lot of commodity not so bullishness happening at the moment. You know, let's take a look at the Aussie. I think it's, oh no, it's the Aussie's turn, yeah. So let's take a look at the Aussie dollar. Now, I don't know about buying the Aussie dollar. I would maybe short the Euro Aussie or short the pound Aussie, but I don't know about buying the Aussie dollar per se. So the Aussie rejected right at resistance. Now, there's a lot coming into play here in the Aussie. Okay, so we've got this trend line that's obviously very key, and that let's remove this for a second. Okay. So we got this 71 70. Even if we make it up here, it's going to be major resistance right there. Okay, so you can I'll actually need both these lines. So let's get rid of this. Okay, there's this is your playground. Okay, this is your sandbox. So if you guys want to play the Aussie, this is the sandbox. All right, don't get out of the sandbox, kids, and make sure you don't pick up if it looks like a Snickers bar and you're in the sandbox. Do not pick it up and eat it. Okay, everybody good with that? Okay, you know, you see the sandbox, you see a Snickers bar, Don't pick it up because it's probably not a Snickers bar, right? Just making sure you all know the difference between. It's gross. All right, so anyway, look, you guys aren't even laughing. Oh, Randall laughed. Okay, all right. At least I got one chuckle. Wasn't too funny. All right, so here's your support right here for the Aussie. This is probably a good place to be long the Aussie. Now, is it a good place to be long the Aussie dollar? You know, maybe being long the Aussie versus something else. You know, maybe being long the Aussie versus the euro, or maybe the Aussie versus the, whatever else, Kiwi, whatever. Um, this is going to be a problem. Okay, that resistance right there. Now, if we break above that, then you've got an opening that takes us up to the daily trend line, which is not too far away, which comes in around 72 and change. But for right now, I think it's, we got to pay attention. Stocks are coming down, copper's coming down. It's not helping anybody's cause at the moment. It's long this stuff. So 71.70, being a buyer back here at 70, 70, 70, 70, 70, 70, 70, 71, 70. There you go. That's the playground. 70, 70. 0.71, 70. I'm going to make that a major resistance. And as bullish as the Australian news was, we're still in a range. Okay? All right. Okay. Okay, buttwheat. Let's go take a look at dollar index. Oops. Okay. Here's the dollar index. Let's go over it intraday. That's the daily. Here's the 4 hour. Okay. So take a looky here. Take a looky loo. So 99.50, and even any dip down here is going to still be bullish. We can come all the way down to this trend line and still be bullish. Okay. So 98.70, 99.50. Okay, so 98.70, 99.50, 98.70. Then obviously 99.5. If this gets taken out, then the dollar is really gonna start moving again. And remember, it could happen today. It is bullish. It can happen because we got Janet Yellen and company speaking. Okay, so it's all potential. Let's take a look at the U.S. dollar Mexican peso. Somebody just did mention the peso rallying. Nick says peso's rallying, risk off. Yes, that's exactly it, Nick. We're seeing a little risk off movement in the market, so the peso, this move is interesting because see, we were in that range, so it's probably stopped out a few people, turned around and went long. Okay, turn around, got a lot of longs out of the market, and then just turn. But isn't this the same as every other dollar pair right now, though? I mean, realistically, isn't it? Wouldn't you just say this is another flag, right? Just another flag. I mean, we got a flag in the pound, we got a flag in the Canadian, we got a flag here, we got a flag there, we've got flags everywhere. Jay, I have seen that. I have seen that. And we're not going to talk about it on this webinar. I'm sorry. It's just, it'll never leave my lips. So, never. It's, yeah. I was at a bachelor party and then I was like, what? I saw that and I'm like, no. Anyway, okay. Jay says, that's a good idea. We must protect the ignorant. Yes. Yes, yes. That's very, very important. Okay. Sorry. Where was I at? I got to continue on. All right. Peso. Let me do something really quick. Let me just double check this. Yeah. Yes. I don't know about what to do with the peso right now. It's like part of me wants to say, dude, I should just be getting long right now, but it's this, it's the same risk that we're dealing with across the board. You got, you got, Janet Yellen and company speaking today. It's like, do you really want to get long a bunch of dollars just in case? I know I probably should, but that, you know, anyway, I just don't know where. I'm not 100% sure where we need to be a buyer. I would think right above here, but because then we know it's in play, like 1681. I mean, we're literally right there. So it's like I don't want to buy it just yet. But if we break out, then we break out. Then the flag's in play, and it's really hard to say. So let's say 1665, 1681. I mean, because I actually enjoy playing the peso now. I've traded it twice. I made some really good money a couple of days ago, and then I lost money last week on my inaugural trade. But I actually made some really good money 2 days ago when I got out of my long, and I'm having fun trading it. So 1665 support 15.65 and resist because it's easy to read. With risk aversion. I guess I needed to put that in there. So 82. I'm going to put 82 just to make sure we clear that 81 and change. Actually, you know what? This thing's gone back to bullish, and the reason why I say that is this: we're in a range here, but we broke out of the range following this big longer term trend higher. See, so we hit the trend line and then basically ramped up. So this thing's actually bullish now. We have upside here. But like I said, it's easy to read from a risk aversion standpoint. Market gets risk averse, you can get long. So, let's see. Okay, let's see. Everybody's asking if that's head and shoulders on the E-mini futures. I'll get there in a second. Let's take a look at the Nordic currencies really fast. Gosh, U.S. dollar, Norwegian krona. Look at that thing. That's bullish. I mean, there's no resistance here. We're in open skies. You know what I mean? And I'm not long, and I should be long, and I am not, and that's irritating to me on a whole lot of levels at the moment, just because I can trade it again. It's like, why am I not long right now? I mean, this is just a straight up breakout. You got crude oil just crapping the bed, and everything's pointing to a higher U.S. dollar Norwegian krona exchange rate at the moment. All right. U.S. dollar Swedish krona is not playing along, so let's figure out why. Because like I look at this and it's like, okay, well I don't want to chase it here. Going to this U.S. dollar Norwegian krona, I don't want to chase it here. I'd rather be a buyer down here. I just don't know where resistance is. It looks like, if you ask me, it looks like we're doing this. That looks like what you have, the way you have to trade. You buy dips here, you sell it up here. So unfortunately, we're right in the middle. I don't necessarily think it's the right time to be a buyer. but I want to be long. US dollar Swedish krona, like I said, it's not playing along with this, but we're probably just waiting for some continued dollar strength here with the euro. If the euro breaks down today, I think you have to be looking at this US dollar Swedish krona, because look, what stopped us is this trend line right here. Okay, this is what's stopping us at the moment from rallying. Okay, so if the euro dollar breaks down, then what we'll do is we're going to do the stealth rally. We're going to start breaking higher, and then we're going to break out. Next thing you know, you're going to have people going, oh my God, the dollar Swedish krona is hitting new highs. Then they're going to pile in, and then you're going to be able to sell a rally as it spikes above. So I think, you know, instead of getting too wound up with prices, just think if the dollar rallies today as a result of the Fed chair and other Fed governors, if that's the case, then just look at the US dollar Swedish krona as being a really, good long. That's what I think. I don't know if there's I guess we should write this. Here, we'll just write it. Resistance, like I said, I think this is capping right here. So resistance here, 877. Okay. 877. And support is here at 865. I mean, we're right on support too. Probably not a bad place to. Let me take that back. Let me say it's probably not a bad place to be long if you want to just keep a really tight stop. But doing it ahead of all this Fed speak is dangerous. Obviously Janet Yellen could, just backtrack a little bit, and next thing you know, you got the dollar comes under pressure. So, all right, so there you go. There's your bias chart. It is done. Now let me answer some questions. Go ahead and take your picture. I do want to talk about the U.S. dollar Swedish, or the E-mini future.